everyone. My name is Bill Levinson, a managing partner with Levinson and Associates. With us today, we have Joseph Loughran, our marketing vice president, and we have a special guest speaker, long-term care specialist, Joe Miller. So we have some great stuff to talk about. We actually put a new incentive together just for today's webinar. We are also going to give away a 16 gig tablet at the end of today's call to the 100th registrant. So we will announce the winner in about, we're going to run for about 45 minutes or so. So we'll announce the winner at the end. Everybody will receive an email after today's call with brochures and product information on everything that we're going to discuss today. So we thought it was important enough to grab everyone's attention, especially on the middle of a Thursday afternoon before the weekend here. So living benefits, okay, long-term care, standalone products, riders, that's a hot subject right now. It's a tremendously underserved part of the marketplace, and it's a great way for all of us, say, life and annuity agents to supplement our income. We all know that when you bring up, life insurance as a typical sale, a lot of people don't want to talk about it. It's not something that you can go celebrate and say, hey, I just bought, a 20-year term or a whole life policy that nobody will see the benefits from until I die, okay? So living benefits is a great door opener. It creates excellent sizzle, okay, especially if you're talking to children or grandchildren that don't want to be left with a burden, okay? So it's an excellent hot button, and we feel at Levinson and Associates that it's important enough for all of us to take, 30 to 40 minutes today and talk to our top long-term care carrier with our #1 long-term care specialist, who's going to bring you some great insight and knowledge and share some awesome tools with all of our agents to help you make more sales and be comfortable bringing up living benefits and or long-term care insurance. So let's dive into just a few new updates at Levinson, and then we're going to dive into the presentation with Joe Miller. First off, our Levinson Agent Expo. The date is now in stone, April 8th, 2016, at our South Florida beachfront resort, a day you don't want to miss. The reason why we're bringing this up on almost every webinar is because the qualification period has already started. Okay, so as you can see on the bottom, the numbers are very minimal. Starting at just $15,000 of paid premium can get you up to round-trip airfare from anywhere in the country and 2 free nights at the resort, depending on which level you fall into. So, of course, it's free to everyone. We bring in breakfast, lunch, snacks, keynote speaker, our top VPs and underwriters from across the country. We don't charge for anything. It's a great way for you to network and mingle with other agents that are in your same position from all over the country, okay? A day you don't want to miss. But again, that blue box talks about qualification levels, all life, long-term care, annuity, disability, everything that we market and sell here qualifies for those 3 different levels on the bottom. So great way to get out of the north, get out of the cold, come down to South Florida, bring your spouse or wife or children and make a weekend out of it. So don't forget April 8th, 2016. Okay, what you're on right now is our weekly training webinar. Joe's going to talk about what's coming up within the next month here. Joe?
Thanks, Bill. I just wanted to highlight some great upcoming webinars for next week. You'll see on this actual slide here, starting on Tuesday, which is the 22nd, at 11 a.m., we're going over Fidelity Life products. That's going to be about a 35 minute long webinar. We're really focusing on the Rapid App process. They actually have a 24-hour turnaround for those Fidelity Life products, so we'll be covering that in detail. And then on Wednesday the 23rd at noon, we're actually having a webinar co-hosted by Illinois Mutual. We're focusing on the Business Expense DI product. We're going to go over some great sales tools, some concepts, and why it's important to offer business expense DI to all your policy holders, especially if they're small business owners. A great product really is something that is a great opportunity for agents to really evolve their practice. And then on that same day at 2 p.m. Eastern, we're actually having a webinar on understanding the living care market. Bill hit on a very, very hot topic, which is living benefits. So on this webinar on the 23rd at 2 p.m., we're going to talk about what are living benefits, what are the different types, what are the qualifications, how are they different from a standalone LTC product. We're going to have some really great guest speakers. We're also going to go over some great marketing ideas and some great concepts. If you're not using living benefit products, how to integrate them into your practice and really start using them on a day-to-day basis to actually increase sales. Of course, like Bill mentioned, you can go right to KerryLevinson.com, register for any one of these upcoming training sessions. You can actually, in the bottom right-hand corner of our website, click on the training calendar. You can view all the upcoming webinars for actually the next couple months. And of course, there's a link right to our YouTube channel where you can watch about 100+ different sales videos on anything from exclusive products to new marketing ideas, just full of great information, of course, on demand at that Levinson YouTube channel.
Okay, thank you, Joe. So as you know, as agents, as a carrier, and even an IMO or general agency, we all need to look at what we're doing, and we constantly have to make improvements and changes. You always have to basically wear two hats, and that one hat should be what's going on today and setting up meetings and appointments. And then you need a second hat to look ahead of the curve and see what's coming up next, so you can constantly grow and pivot with your business. And that goes at any level. So at Levinson and Associates, we realize this, and we are constantly looking around the corner, if you will. So some new additions to our infamous exclusive platform, and I'm just going to bring up a few topics here if you want to jot down any notes, and we can revisit after the call. The first one, just out, okay, it's only been about 4 weeks now, brand new, straight, guaranteed issue whole life, up to $40,000 up to age 80. It's so simple. The way this works, there's 3 health questions. If the client answers all the health questions yes, very simple, they get a guaranteed issue policy, no questions asked. If they answer the 3 questions no, they get an additional 20% death benefit. So let's say it's $40,000, they get $48,000, and everything else stays the same. It's the easiest guaranteed issue life plan we have seen, okay, from an A- rated company. So that's another big plus. Just under that, as you all know, we give all of our agents free retail websites. Okay, we made some recent changes. All of the sites now are mobile accessible, meaning your clients can pull you up from any smartphone, iPad, tablet, iPhone, basically any way they can get to your website. They are now, let's just say, the way the clients go in, they can see quote engines, they can go into X-ray or underwriting tool, and everything is formatted to your smartphone. So it's real neat. Everyone now is on their smartphones, okay? They can't be away from their smartphone for more than 30 seconds, so it makes sense to have your retail website be mobile accessible. So that's done now. We also have a final expense quote engine that's just up and running now. So if you have questions, let us know. We'll dive into that as well. Just under that, our brand new University Plus Youth Life product, the ultimate door opener, starting at just a few dollars a month, okay, like $3, $4. You can get a $15,000 whole life product with cash accumulation with 1 free year scholarship, okay, for little Johnny or little Susie, all for $3 a month. I don't know a grandparent or parent that's going to say no to this for little Johnny or little Susie. And it's so easy. If you want to get set up, the agent gets appointed. You get a link, okay? You take that link and you email it or put it on your website. Your client clicks on the link, runs a quote, signs up online, and prints their policy. It's so simple. It takes about 4 minutes from A to Z. Our infamous college scholarship platform. Okay, we now have 10 carriers, almost 50 products to choose from. All come with 1 free year scholarship to 344 colleges. We just updated the platform. The way it works now, once you're enrolled as the agent, okay, which we can do here, takes minutes. Once you're enrolled, the way it works, as you're signing up clients to buy, let's say, the qualifying product from you, you just send them an email. Okay, they put their name, address in, takes 30 seconds, they hit submit, they are now enrolled in the scholarship program. It's very, very simple now. So we took out some of the obstacles and made it very streamlined. Just under that, Levinson in the news. We are very excited about this. We have a full-page ad in Broker World and Insurance Newsnet in the September edition. Also, just in, we're not even supposed to talk about it yet, you will see us on the cover of Insurance Newsnet magazine, the October edition. We were featured on the cover, and the cover story talks all about our Sell While You Sleep platform and technology and how we are changing the industry. So you'll see that in just about 2 weeks here. Also, coming October 1st, this is big. If you have tried our exclusive mortgage lead program, wonderful. If you have not tried it, even better if you wait. And the lead program director is probably going to kill me for saying this, but if you wait a couple of weeks, we do a 4th quarter blitz. We give you a few free leads for every order. So if you want to wait just another couple weeks here, October 1st, we're going to announce the brand new incentive, which will be for October, November, December, for the end of 2015. On the bottom, again, very, very exciting. We just got the green light for level guaranteed lightning term. I'm sure you've heard about our lightning term product where clients can just go in and buy themselves a policy in less than 5 minutes. We now have a level guaranteed option that will be launched by the end of the year or first month in 2016. So by January, we are extremely excited about that, and we've been working on it for a long time now. Okay, the incentive that we just put together for today's call, very easy. Write a Genworth long-term care plan. Minimum premium of just $85 a month. We'll send you a free 16-gig tablet, has a built-in camera front and rear, all of the bells and whistles. So you have 4 weeks from today. Write a Genworth long-term care policy. From now until the 16th, we'll send this out, no charge, once the policy goes in force. Joe's going to show you some great long-term care resources that are available to our agents on our website. Joe?
Yeah, thanks, Bill. I wanted to do a quick screenshot of the CarrieLevinson.com website and just show everybody underneath our marketing tab, we do have a long-term care center. I've outlined it in red. We also have an in-house LTC specialist. Her name is Deborah Shulman. She is at extension 17, so you can actually call the office, reach out to Deborah, or go right to the website. But the bottom line is we do have the resources. I'm going to actually dive a little bit more into that. You'll see once you click on those LTC resources, you can actually click through all the different carriers and products and actually view everything in real time, from brochures to product guides, even to consumer marketing pieces. Those are all available in that same section. So definitely take a minute and check those out on CarrieLevinson.com.
Okay, thank you, Joe. Okay, we're now going to dive into today's presentation. Also, don't forget, sit tight at the end of the call. We are going to give away the free tablet to the number 100th registrant for today's webinar. So without further ado, we're going to introduce Joe Miller from Genworth Financial, who's our long-term care specialist. Joe?
Great, Bill. Thank you so much, and thank you, Joe, for having me. I really appreciate the opportunity to join everyone this afternoon. Again, as Bill said, my name is Joe Miller, and I'm with Genworth's Long-Term Care Relationship Management team. At Genworth, we're always grateful for the opportunities like this to plug into weekly webinars to bring education and awareness to an LTC industry that's relatively young. You know, when you think about the life insurance industry, which has actuarial data dating back to the 1800s, the LTC industry is roughly 40 years old, so it's in its infancy at this point. And recently there have been some growing pains, needless to say, with lots of change. So if you've been following the LTC industry over the last several years, you've seen LTC carriers take actions to raise in-force policy rates. You've seen adjustments to reserves. You've seen price increases, all in an attempt to redefine itself as the industry matures. The challenges are definitely there, given of the top 10 LTC carriers in 2003, 7 are no longer selling, although we are starting to see momentum in the right direction with some re-entering. And yet, here's Genworth, still demonstrating industry leadership, still demonstrating our commitment to the long-term care industry, and that's backed by pure numbers here. We have a presence with over 1.2 million policyholders. We have paid to date over $12 billion in long-term care claims. Our reserves have been strengthened even as recently as later last year with over $20 billion in long-term care reserves to be able to honor our commitments to our policyholders. On any given month, we collect roughly $200 million in LTC premiums to be able to pay roughly $5.6 million per day. That's every day, nearly $6 million, leaving Genworth to pay long-term care claims. So you can see the demand, you can see our commitment. With that backdrop, why don't we dive into the presentation here to be able to assess, how do you choose a long-term care insurance solution? There are many long-term care solutions available, and it's hard to know which one fits your client's needs. Hopefully we'll get a better understanding today as we lay out a few solutions as we talk about how we can meet each different client need here. So let's see if this moves along. I trust everyone can see the page here that just moved forward. If we look at our agenda, we're going to discuss how to identify whether your clients have a need for long-term care insurance, identifying various factors that go into understanding the unique situations. I'd like to focus on 2 of the 4 solutions that are mentioned in this presentation in the interest of time. We'll focus on the traditional long-term care insurance as well as the linked benefit solutions that Genworth offers. And lastly, we'll look at a few examples. If we have time, we'll walk through a few examples to help you position with your clients appropriately. And then if we have time, we'll look at our traditional LTC product offering, some recent changes that we've made, and some tools and resources that are there for you to use. If we do not have time for the tools and resources, I'll be happy to get that out to Joe, Bill, Deborah, and the team there at Levinson & Associates, and they can certainly distribute that at their convenience. So let's talk about the need. How do we identify whether your clients will require a long-term care insurance solution, especially when they're in their 40s, 50s, and 60s? Well, we have some tips here. First, do your clients recognize that nearly 70% of people over the age of 65 will need long-term care services and support at some point in their lives? It may be an assisted living facility, it may be home care, it may be a nursing home. Many times we run into folks that feel that long-term care insurance is just nursing home insurance. Yet, from Genworth's data, our experience shows 70% of all of our claims are for home care. So that's tremendous to position with your clients there. If your client says yes, do they have a plan to address this risk for themselves so that it limits or eliminates the impact to their income or assets? If not, they're most likely in need of some form of long-term care insurance solution. Let's go over a few misconceptions before we kind of get into the spectrum of LTC financing solutions. From a health insurance standpoint, health insurance may only provide limited coverage for specific types of LTC expenses. Typically, plans cover services as long as there are signs of improvement. They do not cover extended care in an assisted living facility or nursing home or continued need for home health aid or chronic illness. On the Medicare and Medicaid front, that generally covers skilled nursing home care after a hospital stay of 3 days. Medicaid can contribute towards long-term care, but it requires recipients to use their income to pay for care and spend down their assets. And then there's the beloved family and friends that we like to rely on. This can be a great solution for some families who are committed to providing care, but it's often much more physically and emotionally demanding than people ever realize. And what we always like to position is, have you had that conversation yet with your family and friends? Do they know that you're expecting them to provide care? Let's look at the spectrum here. Here's another helpful tool when talking with clients. It includes having an understanding of where they are on the spectrum of income and or asset protection. On the left, there's the concept of self-insuring. On the right is the option of owning a full suite of products there. Realistically, your clients are going to fall in between that spectrum, and it's all about that balance here. So not all solutions are right for each of your clients. To help make an informed decision, you must first understand them. It's more than just knowing their age and gender. You've got to really get to know your clients here. So understanding your clients. I'm sure most of you already do some sort of needs analysis or a fact finder, but this may be a helpful guide for you to consider here. So take number one, step one, understand some of the key demographics about your client. Some of these may be more obvious than others. Number two, ask your clients questions that help you gain a better understanding of their key attitudes, beliefs, and behaviors. Once you learn all of that, you're better prepared to present products that are better aligned for your client's needs and may help them make a more informed decision. First, it's important to understand the quantitative attributes of your client, including age, gender, and health. Next, take a look at their family situations. Some obvious questions. Do they have one? Do they have children? Are there multiple families involved? There needs to be communication that's aligned between those parties. This is going to affect all of the solutions that are right for them. Third, their current and projected financial status. And lastly, it may be important to understand where they live. I tossed that out here because Genworth has industry-leading data in our cost of care website and app. We have a mobile app that's a best practice throughout the industry to provide regional data, regional costs by region. If we have enough time, I can kind of preview that for us. Step two, in addition to the demographic factors, it's important to also take a look at a more needs-based view. Number one, would they consider an insurance solution? They may be skeptical, and if they would consider an insurance solution, do they feel empowered to take action? How well prepared are they? Number two, what is their risk tolerance? Do they want to get the most LTC coverage for their premium, or do they want to get some benefit out of the product, even if they don't have an LTC event? Number three, are they concerned about potential long-term care expenses? If yes, are they willing to spend down their assets or depend on Medicaid? You know, a lot of questions we like to toss up there are, what assets are they willing to sell first if they're going to rely on this concept of selling down assets? Moving on to number four, do they want to leave money to a beneficiary? Let's dive into some solution options and how they may address your client's needs here. Again, there are four in this presentation, but we're going to deal with the first two here, and we'll dive in deeper to Genworth's traditional LTC offerings, and I'll provide some updates there. So you'll use the information you gather when getting to know your client to help them choose appropriate LTCI solutions to help meet their needs. So first, traditional long-term care insurance, which is the best way to leverage your client's dollars for LTC solutions. A linked benefit solution is number two here. That would be embodied in Genworth's Total Living Coverage product. We call it TLC. And then something that's kind of outside the scope of this webinar this week is solutions 3 and 4, the life insurance with a qualified ABR. We do have that at Genworth. That's located as a rider on our Index Universal Life product, on our Foundation Builder IUL, and our Asset Builder IUL that many of you are familiar with. And then number 4, life insurance with a chronic illness rider, which is really for a one-time permanent illness situation that Genworth does not offer at the time. So for visual learners, here's a nice chart. It is not drawn to scale here, but it does show you if I can move my mouse and show over here on the left shows the maximum amount of leverage represented in long-term care, moving progressively towards life insurance solutions. So again, we're covering traditional LTCI and then linked benefits. So let's jump into traditional LTCI. Long-term care insurance covers long-term services and support, including personal and custodial care in a variety of settings, such as a home, community organization, or other facility. Long-term care is the assistance or supervision needed when your clients are unable to do some of the basic activities of daily living, or as we call them, ADLs. And there's 6 of them: bathing, dressing, eating, continence, toileting, and transferring. Your clients also may need help because of severe cognitive impairments, something like dementia. They may be caused by Alzheimer's disease or other brain disorders. A need for long-term care may result from accidents, illness, advanced age, strokes, other chronic conditions. If we look at Genworth claims data, dementia represents roughly 33% of our claims. Cancer is 15%, strokes is roughly 5%. So that gives you an idea of kind of what we're looking at on what causes claims to be filed. Looking at an ideal prospect for traditional long-term care, this is a solution that is purely long-term care related. There's no death benefit. Typically, the ideal prospect are generally between the ages of 40 and 65 years old. If your client wants to use the most efficient way to cover long-term care risk, if they don't want to be a burden to their family members, if giving money to their heirs is not a top concern, and if they can afford regular annual premium payments, then traditional long-term care insurance is the best way for them to obtain the highest leverage over the duration of their policy. Linked benefits, you may have heard the categories of combination products or hybrid products, as well as linked benefit products, all used interchangeably. It's important to clear things up here. Combination products include hybrid and linked benefit products, but hybrid products and linked benefit products are not the same. According to LIMRA's definition, they define linked benefits as a combination product that provides long-term care benefit payout above the death benefit. It accelerates the life insurance policy's death benefit, as well as providing a long-term care extension rider that covers long-term care benefits beyond the life insurance policy's death benefit. On the other side, hybrid products are represented by the long-term care with the ABR rider, as well as the chronic illness rider there. Let's dive into the ideal prospect of linked benefit, which is represented by long-term care concerns with some life component. Generally, the ideal prospect is between the ages of 50 and 75. Clients want to protect their assets. They want to address potential long-term care risks. They do want to leave something to their heirs because there is a predominant fear of a use it or lose it concern. And they can also afford a single lump sum pay solution. Genworth does not offer a limited pay solution at this time. It would be a single lump sum. An important selling point with our linked benefit product, Total Living Coverage, is that it's a great opportunity for you to position your client's lazy money and put that to work. If you have an underperforming asset in your client's book within your book, it's a great way to reposition that asset to work harder to obtain pretty serious leverage. On the long-term care benefit side, ideally a TLC product will give you 6 times the premium leverage to cover long-term care expenses, and on the death benefit, 2 times leverage. Again, a tremendous way to put your client's lazy money to work, whether that be a CD that's coming due or some other savings account that's really earning very minimal return. I'd like to run through some examples here to kind of get us grounded. Meet Bill here. He's a 55-year-old. He's got $100,000 in available assets. He's taking care of his mom's expenses while she's in a nursing home. He does have a life insurance policy, but is interested in something that will protect his income and assets from a potential event. So the question is, what solution would work best for Bill? And I think it's pretty apparent that traditional long-term care would be the best way for him to obtain the highest leverage to put his premium dollars to work here. Let's move quickly to Sally so we can get on to some additional Genworth offerings. Sally, given her family history, she's concerned about protecting her retirement income and assets from a long-term care need. Her financial professional here has shown her the projected costs of care, and she's concerned that she won't have enough savings to pay for potential long-term care expenses with just her cash. Yet she does want to leave some money for her beneficiaries. As we've just kind of laid out, linked benefits and Genworth's TLC solution specifically would work best here to give her the long-term care leverage that she needs to address that fear, as well as providing that death benefit that she truly needs here. So just to summarize this presentation here, it's really all about you. You all are the one that we want to empower as agents and producers in the field to really drive this conversation. Numerous years ago, Genworth put together a white paper, and one of the leading data points in that study that they conducted was, from this Genworth study, 80% of all long-term care discussions were initiated by clients. Yeah, it's hard to believe that the clients are bringing this to their agent, their advisor, their producer. We want to turn that back to you and get you to proactively initiate these conversations with your clients, because the need is there, the data shows it, the claims history shows it. And with that, I'd love to segue now to the other presentation that will walk us through what is Genworth doing in the current marketplace here. This, I assume everyone can see my screen here, is Genworth's Privileged Choice Flex 3 offering. I'm going to move to the state availability map, which shows you color-coded scheme, the Privileged Choice Flex 3 Enhanced product, which you can see in the lighter blue, lighter green, it might be on your screen. We launched this product July 20th. It's an enhanced version of the Privileged Choice Flex 3, which is in the gray here. We expect to launch Wave 2 of the enhanced Privileged Choice Flex 3 product in roughly 6 or 7 states. That'll be later this year. But right now we have enhanced Privileged Choice Flex 3 in 35 states that again launched July 20th of this year. We have several states that still do have our Privileged Choice Flex 2 offering. One state still remains Privileged Choice Flex. That is the state of California. For those of you on the line, we did launch an update as recently as this past Monday, in the state of California, where we have a reprice of our California Flex product there. And you will notice, for your benefit, if you're in the states of Vermont, New Hampshire, and Massachusetts, we are no longer actively selling in those states. So again, that's the footprint of product offering. So keep in mind as we're moving through what pertains to you. But the balance of this presentation is going to address the enhancements that we have on our Privileged Choice Flex 3 product. Overall, we have adopted a base rate that is as much as 10% less than the previous Flex 3 offering. Again, this was just launched July 20th. We are reducing base rates as much as 10%. Now, this does not apply to those that are of the standard underwriting class, 4% compound, or 5% compound. We'll talk about this on numerous slides coming up here as we move through the presentation. We have included a refund of premium benefit up to the age of 65, also called an ROP benefit. That's at no additional cost. We have introduced an increased coverage option. So essentially, we look at this like adding a slice of coverage, where you would the client would go back through underwriting, and at the current underwriting class and attained age, could add some additional coverage. We have adopted a checkbox married component, where we've introduced a new couples discount, and whereas previously 2 people apply, 1 is issued, you would get the discount. Now only 1 needs to apply to get a couples discount. It's simply in a checkbox married format there. We have added an informal care option. This is a rider for homemaker insurer care. This is a rider that costs essentially 11%. If you elect not to have this rider, you get the reduced base rate as much as 10% that we've detailed up here in the first bullet here. And then you have the option to drop the waiver of premium to reduce premiums as much as 5%. On average, the reduction in premiums for Enhanced Privilege Choice Flex 3, which launched July 20th, will be about 5% if you elect to drop the waiver of premium. So let's move along in a nice tabular format that shows the old Flex 3 version versus the Enhanced. Everything is similar here with a monthly max of $9,000, daily of $300, all of the normal standard benefits that are industry leading, brought to you by Genworth, including privileged care coordination, which helps with plan of care and even filing the claim paperwork, all the way through to the Live Well campaigns that we have that are run through the Mayo Clinic, an industry-leading wellness program that we have in partnership with them. And so we've highlighted a few differences that we just detail in the bullet format here. The couples discount, you'll see that through the checkbox married, 15% discount for the Enhanced Flex 3 for individuals with a spouse or partner, even if they don't apply. Homemaker chore care, we've added the informal care option with the ability to add this rider at roughly 11% of the premium cost. If not, you can reduce premiums, as we said, up to 10% if not selected. Again, that does not apply to those with the standard underwriting class, those with 4%, 5% compound, and there's a few anomalies, random pricing cells. In the same table concept here, waiver of premium is included now with the option to remove it for a 5% reduction. We have included the ROP, whereas the previous version did not, and the increased coverage option is now, as we call it, the add a slice, is now a benefit that's available throughout the 35 states that have Enhanced Privilege Choice Flex 3. In the interest of time, these are just further explanations. We'll be happy to provide this presentation to Bill, Joe, Deborah, and the team, and they can certainly distribute to you freely. So here's something that's interesting, and this involves those of you that have written Flex 3 policies prior to the launch of Flex 3 Enhanced. We have honored the changes that are being made, and we're going to apply the current changes in Enhanced to those that have the original Flex 3 product. So we're going to offer everyone that bought Flex 3 last summer will still get the base rate reduction that is included in Flex 3 Enhanced. They will get the ROP, they will get all the benefits that we've just talked about, and we will take them through a conversion process. We're in wave 4 of that conversion process, which has been ongoing for the last 6 weeks. Some of you might have been experiencing this conversion process, moving your clients' Flex 3 policies over to a Flex 3 Enhanced that gives them this full assortment of enhancements and base rate reduction and everything we've previously talked about here. This details here the transition process. As we continue to wind that down, it becomes less and less important. But again, if you're a producer that has a client that previously had Flex 3, we're in the process of converting them. You should have received a letter detailing who's going to be converted, as well as the client will receive a letter as well, walking them through that. It's a seamless process. There is no chargeback to commissions whatsoever, only the trail commission moving forward. Here's the policy language on these different features that we've talked about. I'm going to move through this quickly. Again, you can review it in further detail at your leisure when this presentation is provided for you. I wanted to walk through a nice little example of the informal care rider. Here we have an example of a $4,000 monthly max for nursing facility and home and community care. With the informal care rider that's elected in this example, half of that, or $2,000, is available for expenses provided by an informal provider. So 50% of the monthly max for home and community care is allowed. So walking through this example where we have expenses billed by an agency of $1,000, the full $1,000 reimbursement is applied here, where roughly $2,300 is billed on the informal care side. Only $2,000 of the $2,300, based on our example here, would be eligible. Therefore, by electing the informal care rider in this example, $3,300 of billed expenses would only receive $3,000 of eligible reimbursement. Looking at a nice example where the informal care rider is not elected, an example where all of the agency expenses were billed and then reimbursed through that standard Genworth process of adhering to the $4,000 monthly max for nursing facility and home and community care. I hope that's clear there. We have provided a table example here, something that we just talked about. Monthly max of $4,000, agency care of $1,000. The example that we just talked about was $2,300 of informal provider care received. Only half of the $4,000 is eligible. Therefore, $1,000 plus $2,000 would equal the total reimbursement of $3,000. In the next examples, there would be full reimbursement given the policy specifications are adhered to here for a full $2,000 reimbursement and $4,000 in the third example. This is the policy language that is listed here for the waiver of premium and the option there. That's for the producer's benefit, as well as the refund of premium. Again, I would encourage you to review this at your leisure, but I'd love to move on to our illustration software. So you can see, if you want to call it the checkbox married, where a couple's discount when one person applies is married or has a legal partner. So again, the 15% discount is available by checking yes by the fact that you are in a marriage or a partnership there. That's where you can find that on the illustration software. So let's talk about pricing here. We have multiple scenarios here. This is a table that I want you to get familiar with here. From a couple standpoint of Enhanced Privilege Choice Flex 3, this is the current product, again, that launched July 20th, available in 35 states. A 2-year benefit period. We have scenarios with no inflation. In the first swim lane here, there's 3% compound inflation and then 5% compound inflation. So at the multiple age range here, you can see the 10% reduction in base price that we have shared in previous slides, moving from the standard Flex 3 to the Enhanced Flex 3. A typical client is between the ages of 50 and 60, 3% compound. Again, you can see the 10% reduction in price that went into effect roughly July 20th. And again, for those that have Flex 3, they're going to have their policies converted to participate in this base rate reduction. Notice, as we said, 4 and 5% compound are not eligible. So there's a 0% change in the base rate here, given this scenario of 4,500 monthly max. There's a 90-day elimination period, and we are not including the optional informal care benefit. That's why we're able to participate in roughly a 10% base rate reduction. Here's couples pricing on the 3-year, very similar. You'll see a pricing anomaly here that's based off of actuarial experience, where other cells see a 10% reduction. This one happens to be roughly an 8% base rate reduction here on the 3-year couples pricing. Moving along, here's the 4-year benefit, really the same format. I encourage you to review the pricing at your convenience. Let's move on to the individual rate here. On a 2-year benefit, single females account for 65% of our claims. So as you can see here, between the single female and single male, the premiums are much higher. Yet they participate in the 10% base reduction on the 3% compounded and no inflation. standard underwriting, 4 and 5% compounded inflation, do not experience that base rate reduction. Let's move on to the 3-year, very similar as is the 4-year. So why Genworth? Again, we've talked about our experience, our policyholder detail, the reserves. There's so much there. I think something that will really help you drive proactive conversations are the industry-leading tools and software that we have available. Many of you are familiar with our Genworth Long-Term Care Sales Center. That can be found at genworth.com/LTC Sales Center. Again, I can shoot these web addresses to the team at Levinson Associates, and they can certainly distribute freely. Notice the cost of care centerpiece that I've already addressed here. I thought it would be good to gauge kind of this site where by region you can select state, you can select key locations. I've selected the Miami area, and here they have provided adult daycare annual costs. This is current relevant information that's updated every year, referenced in most financial periodicals and sources. They let our competitors leverage this Genworth cost of care data, showing assisted living price movement trends. There's semi-private nursing room data here. You can see roughly $100,000 annual cost in the Miami area with annual growth of about 4% there. Encourage you to explore this tool and start to drive that conversation with your clients. This is a phenomenal way to do that. Again, it's accessed through our LTC Sales Center. You can get to it by just clicking on the landing page here. Other tools, resources, sales ideas, white papers, all throughout this site. I encourage you to leverage it. One of those that I'm especially proud of, we'll look at our Evaluate tool. This is a pre-quote underwriting tool that allows you to kind of gauge the underwriting class of your client prior to ever submitting your business. So it allows you to place better business and to be more efficient as a producer. Here we can select what product we want. We want the long-term care product, and you have an ability to enter all of the client data that you're able to gather to assess underwriting category. Notice the bottom here. I want to bring your attention to preferred best. There is next to no information and data entered into this system right now. Therefore, we're defaulted to preferred best, Genworth's best underwriting class. But as we move through the various questions and uninsurable conditions, if you're sitting across from a client who has a stroke, all I need to do is select stroke, and in real time, the Genworth Evaluate tool will tell you that this person is not eligible for long-term care insurance. And there's numerous uninsurable conditions and medications that would make them ineligible for Genworth long-term care coverage here. So we also have condition by condition an ability to, let's take a look at, for example, sleep apnea. Sleep apnea, if your client identifies that they have sleep apnea, you move down to the preferred class. Over here, we have a series of additional questions that allows you as the agent to dive deeper, to place better and smarter business. Have you been advised that you should use a CPAP machine, etc.? And if that's a no, notice that we move right back to preferred best. And here again, if this is no, we have defaulted to preferred best. So again, it's important to gather the data that you can to get a sense of underwriting class. Look at anemia here. This is a great example where if someone is anemic, we will be prompted in the Evaluate system to walk through a series of questions. Have you been hospitalized? No. Have you had 2 or more ER visits? No. Have you had a non-operative transfusion? No. And are you on certain medication? No. Is your anemia caused by an iron deficiency? At this point, we haven't answered this question, and we're in the select underwriting class. If we say that it's caused by an iron deficiency, notice that we move right back to a preferred best underwriting category for favorable pricing with Genworth long-term care insurance. I encourage you to dive as deep as you can with your client to submit business that is as accurate and representative of their medical condition as possible. In the interest of time, I want to thank everyone. These are just a few previews of the tools and resources and what's going on with Genworth. Again, I want to thank you for your time, and I will be sure to follow up with Bill, Joe, and the team and get everyone these presentations as well as the links to these sites. Thank you guys for all you do each and every day. And at this point, I'll turn it back to Bill and Joe. Thanks so much.
Yeah, thank you, Joe. Great stuff there, great tools. We're going to send out an email, like I said earlier, to everyone on the call, and we'll include some links and brochures of everything that we went over today. Okay, once again, I want to thank everybody. I know we ran a little bit late.